In this presentation, we're going to enter two more receive payment forms into QuickBooks Online. In other words, we've entered the invoices in the past. Now we're going to be receiving the payment on those invoices. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. Let's take a quick look at the flowchart on our desktop version. So here's our desktop version. We're going to be creating another sales receipt. And that means we've had an invoice in the past, we sold guitars or services in the past, and now we're going to be receiving payment on it. We sent out the invoice, now we're going to be receiving the payment. We're going to put it into undeposited funds at that point in time, and then we're going to record the deposit for it. Back to the QuickBooks Online, let's first open up our reports, as is our custom. We're going to go down to the reports down below, open up our favorite reports. That's going to be including the balance sheet report. So I'm going to open up the balance sheet report. We're going to be changing the dates up top, so we're going to scroll up top and change those dates to, let's scroll up top and go 01/01/20 to 12/31/20, January through December. Run that report. We're going to go up to the tab up top, right click and duplicate the tab again. We're then going to go back to the tab to the left, and then we're going to go to the reports on the left, and then we're going to open up our second favorite report, that being the profit and loss report. So we're going to open up the profit and loss report. Going to change the dates on top of it from 01/01/20 to 12/31/20. We're going to run that report then. Then we're going to duplicate that tab, right clicking on the tab up top, duplicating the tab up top. Then we're going to go back to the tab on the left, and we're going to open up our final report that we like to take a look at. I think it's a good one to look at, and that's going to be the trial balance, the old trusty trial balance. Trusty trial balance, so trial balance. We're going to open that one up, and then we're going to change the dates on the top of that one, and that's going to be for 01/01/20 to 12/31/20, and then we're going to run that report. Then I'm going to right click on the tab up top and duplicate that tab, go back to the tab to the left, and then we can finally do something here. We're going to go to the new tab up top. And we had an invoice last time. We have entered invoices. Now we're going to go to the receive invoice payment. Again, note the difference in the names. It's going to be called a receive invoice payment here. And then on the form, as has been traditionally the name of this form forever, it's going to be called the receive payment type form. All right. And so within the receive payment type form, we're going to say we got a payment from a customer. We got it, like we can imagine we got it in the mail, or they came in and gave us the payment or something. We say that's great. It came from Jones. So if I select the drop down, we're going to say Jones, or we can type in Jones. It'll start to populate for us. We're going to pick up the Jones item there. It'll then populate the information down below related to the invoices that Jones owes us, because you would think then that we would be applying out this payment to them. We're going to keep the date at the 1/12/2020. The method this time, let's say, is cash. Let's say Jones came in and just paid us cash. We said that's great. And so we have no reference number, so then we have undeposited funds. We're going to put it into undeposited funds, not the checking account, because if we get cash, we're dealing with cash, then we have to go to the bank and deposit it, or else we just, we don't deposit the cash. But typically we want to deposit the cash because we want to track it in the checking account. And when we make the deposit, we're going to have to group all the cash together. That's when the undeposited fund is really useful. You should be using it at that point because it'll make the reconciliation process much easier. Now again, I could put the amount up top, but if I just select the actual invoice that we were paid for, that $7,500, I'm just going to select it, it'll populate it. So Jones came in and just gave us $7,500. That's nice. So we got that. It'll just populate it. It'll tie out to this invoice. If I click on that invoice, it'll then go to the invoice. If we got paid something other than $7,500, then we can put that, go here and put that number in, and there'll still be amount due related to that invoice that hasn't been fully paid yet. So let's go ahead and pay this and see what it will do. What's it going to do? Of course, the receive payment means accounts receivable is going down. So the AR goes down. Someone owed us money, they now paid us the money. The other side will typically go into undeposited funds or into the checking account, depending on how you have that set up. We have it going to undeposited funds. Let's go ahead and save and close and take a look at that. So we'll save it and close it. We'll then go to the balance sheet. I'm going to go to the balance sheet. Let's check it out on the balance sheet this time. I'm going to refresh the old balance sheet report so we can see what happens. Then I'm going to close the hamburger. I'm going to make it a little bit larger. And we know then that the accounts receivable should be going down. If I select the accounts receivable, see the detail in it, we see now that it went down by these payment amounts. So the payment amount, there's the 7,500. So it went down by that 7,500, this payment amount. Notice here, again, it's called payment here. That's what they're calling it here, because it's, I think, why? Probably because it's a shorter name, so it's easier to be dealing with. Where here, it's the most traditional name. It's been called forever in QuickBooks, the form called the receive payment form. So if I close this back out and roll back up, scroll on back up and go back to our balance sheet report, then the other side is going to be in undeposited funds. Pretty much cash, basically cash. You know, you can think about it, financial accounting, it would be under cash, but it's down here in other assets because it's not the same as a checking account in terms of how it functions. So we're going to say that that's going to be the 7,500. There's the 7,500 there. Looks good. Scrolling back up, we're going to go back then to the balance sheet. Any effect on the profit and loss report? None. No effect on the profit and loss report. Why? We got cash because we already put it on the P&L when we recorded the invoice. And note, you might say, hey, well, I don't see there's only 7,790 here. We've been making deposits of 5,000. Where's that amount? It was reported in the prior period, in the prior year. Well, it's not in the QuickBooks software at all. That's because it's in the other accounting software that was being used, but prior to us putting the information into QuickBooks, then it rolled over into retained earnings. So it's part of retained earnings as of the cutoff date when we started entering the data into the system, which was January 1st, 2020. All right, now let's do this again. If I go back to the first tab, let's imagine we got a check from Smith Guitars. We got another check, or Smith comes into the shop and pays us. Now, note, we could do it the same way. I could select the drop down and go to the receive invoice payment, or we could try to go down here to the sales information and look at the customer information for Smith. I might say, hey, there's Smith. I'll go in here. I'd like to go into the customer section in this way, and I'd like to show you different methods to kind of do this because different people will, like to manage their system in different ways. And if I was to go down and say, okay, there's Smith. Yeah, I see that you owe us $8,000. That's great. So if I go in here, it's great that you're going to pay us now. That's great. And then we're going to go in and say that there it is. There's the invoice that you owe. And so if I close the hamburger, it's nice to have the hamburger closed in these sections. And I can close this as well. Give us a little more room. There's the amount. And you're going to say you're going to pay us for that one. That's good. Then we can go to the receive payment here. Again, note what the difference in the names are. It's called receive payment here. And it's going to be the same form as if you click this one and you had the receive invoice payment. So just realize that they're kind of toying with those names right now to see what works best for them. And that's what QuickBooks Online does. So some things like that'll change. All the forms will basically be same in terms of function, but names and where things are showing up as and whatnot could change. That's why we'll update the course from time to time here. In any case, we're going to go down to the receive payment, and then it will obviously populate the Smith Guitars for us because we were in that customer. We're now in the receive payment form, and we're going to record this payment as of the January 1st as well. The payment method, we're going to say, again, is cash. So we have another customer. We got customers that like to carry a lot of cash. They came in and paid us the $8,000. And obviously, it's going into the undeposited funds because we're dealing with cash now. And there's the $8,000 here. It's already populated for us because we chose that particular invoice and said there was a receipt payment for it. If they didn't pay us the whole $8,000, then we could put some other amount here, other amount there, and then it would show some amount that was still past due on this particular invoice. Invoice is already checked off because we clicked it because of the way we went into the invoice. So the invoice is checked off here. There's the original amount, the open balance amount, and so if we pay out the $8,000, then we would be paying off the full amount that was due. So what's going to happen when we record this? Well, it's a received payment. That means the accounts receivable is going to go down. This Smith owed us money. They paid us. Accounts receivable is going to go down. The other side is going to go to undeposited funds, or if we had that set to our checking account, into the checking account, we have it going to undeposited funds. Let's save and close it and take a look at it. So I'm going to say save and close, and QuickBooks gave us a nice message here, and then I'm going to go down to the trial balance. Let's take a look at this on the trial balance this time, the trusty TB. I'm going to scroll up a bit, and so we're at the 125, and then the accounts receivable is going to be here. Accounts receivable, going to select the accounts receivable, and we got a payment from Smith Guitars now, or is that who we got paid from? Yeah, it was the $8,000. Yes, $8,000. That's the one. Notice it's populated as payment now. So payment, if I select payment, then it's going to go into the form type of receive payment. There's our actual form. Closing this back out, scrolling back up, where's the other side? If I go back to our reports, the other side then, if I scroll down, is going to be in the undeposited funds. Selecting the undeposited funds, we now have that amount, 8,000 payment, populated here. So now we have a whole lot of undeposited funds, and this account represents money that we're holding on to that we haven't put in the bank yet, and we really need to go to the bank because we shouldn't be holding on to like all that money. So if you have anything in undeposited funds here, you should have it on hand, and if you don't, then something funny happened. Then and you got to figure out what happened. If you have something in undeposited funds and something funny happens, you're not alone. That happens to a lot of people. Then what you want to do is basically reconcile the bank accounts to figure out if there's any duplicates, which is typically what happens. To deposit got entered twice some way, and then you want to reconcile the bank accounts, and that'll give you some assurance as to which accounts are possibly duplicated. So those are going to be the two accounts that are affected. Is there any effect on the trial balance, on the profit and loss? No. Same reason, because we recorded the invoice in the past. That's when we recorded the revenue going up.